And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep. Happy Friday, everyone. May the 12th. I'm John Hoagland. Thanks for trusting us with your time. How is my good friend Jack this morning?
I'm doing well. Got a super loud golf shirt on. I now see in the camera here. You said May the 12th there. Like I thought you were doing like a May the 4th type thing. And I was like, that's the wrong day for Star Wars,
Yeah,
my man.
It's 8 days past, but yeah.
Good to know.
Yes. All right. So as always, we're focusing on seeking accurate context in these markets, always thinking about risk management and remaining patient this morning. This morning, the import-export numbers came out. The import numbers came out 0.1% higher, but the export numbers came out just as expected. We're still waiting for the 9 o'clock central consumer sentiment, the Michigan consumer sentiment to come out. And then we've got a couple of talking Feds later on in the day when I hope everybody is done trading up some money and ready to start their weekend. At 1:20, we've got daily. And after the close, 6:45 Central, Bullard is going to be speaking. Who knows where he's going to be speaking, but I won't be watching because it'll be the weekend and we're going to put this aside until Sunday night.
You don't want to spend your Friday afternoon listening to Bullard talk about not cutting rates in our lifetimes?
No.
He's like the last of them I would spend my weekend watching, to be honest.
Right? We could do one daily at 1:20s, but I am hoping to be done trading by then. I really haven't done much this week at all. Had a couple of trades yesterday. We'll see what comes up today. We'll see that in the charts here shortly. So we've got U.S. stock indices leaking higher overnight. A lot of folks speculating that's on expectation that the Fed may pause rate hikes after some proof of easing prices from the PPI number and some cooling employment in the jobless numbers, the jobless claims. That's all good, unless, of course, you're jobless. That's probably not that good. But good news seems to be bad news, and bad news seems to be good news these days. So simmering below all of that, banking situation still stews as PacWest suffers shrinking deposits, and the debt clock keeps ticking. Negotiations that were supposed to start today have been put off until early next week, but they say that their aides are going to be trying to work things out in the meantime. I don't know how that's going to work, but the clock keeps ticking as far as the VIX, the dollar index, and the yield on the 10-year VIX is down this morning at 16.74 last I checked, where 17.18 yesterday at this time. The dollar index up over 102, 102.27. Yesterday was 101.81 at this time, and the yield on the 10-year right at 3.4%, up slightly from where it was yesterday. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. Make sure you subscribe to our YouTube channel. And it is Mother's Day this weekend. Happy Mother's Day to all you mothers out there.
Yep, that's a big one. Holden's saying my video quality dipped, so did something change? No, nothing that I know of here. We're still trying to figure all this out. As someone said, I should get some wallpaper up here. Yeah, I know. I got to do this in the basement right now because I got a family upstairs that doesn't want to listen about Bullard talking. The green screen didn't work. So if you have any feedback at any point, let us know because we're trying to figure this out. And with that, should I leave and try and come back with the higher res? Holden, is that okay?
I'll say good morning to everybody while you're gone. Okay. So Brian, first one in the room this morning, futures trading today. Almost. Brian won the prize this morning. Shaw, good morning. Preserve that capital 100%. Rooster crowing this morning. Futures trading today. Good morning to you, Rooster. Not sure why that's taking so long. If you would contact the support team, I'm sure they could tell you what's going on. Scott saw and he conquered. George, good morning. Lacey says good morning as well. She is after all, the center of the universe. Stephen, good morning. Grounds hero. Shy T. Dan Trader, good morning. It's not too hot in Chi-Town for the rally sweater. It's maybe around 70 and it's kind of damp. We're supposed to get some rain later, so no rally sweater this morning. I don't you'd be sitting here cooking. Although I will put it on if need be. Pete, George Duque, good morning. Where did I go? I got lost here. Hang on. There we go. Snowflake, good morning, Alejandro. Jay, Bill, Joe, when what should happen doesn't happen. Yes, sometimes what doesn't happen is as important as what does. Hegel Matters, John, good morning. Bear goes long, 80 bleed. Happy Friday. Prayers and love to you, Sarah Hall, Vlad. Robert, good morning. Stephen, Anissa. There's Jack again. Good morning, Shaw. Need some wallpaper. NASDAQ. White House cap. Good morning, Vince. Good morning, Stephen. Henry. Dimitar, Dan Trader, good morning. Yeah, the age of the people who do the real work you're probably right there, Dan Trader. It's good to see you. Good to have you with us. Austin Snowflake, Jeff B, Caesar, Mike H, Jeff B, Chris P, Mike H again, Maya, Mr. Shinnick, good morning, JT, good morning to Bluebell, Rusty Golfer, my spirit animal, it's good to see you. Don Clemens, Ed, good morning, Will, good morning, Columbus, good morning, Ron Merlot, good to see you. Jeff B, good morning. Crashed another one. Yes, another event. Jeff, take it easy. Stay away from that daily loss limit. Learn when to call it a day. Jake, good morning. Brandon and Trading Research. Hello to everybody. It's again always a pleasure. I don't know if we have Jack here back with us yet. There he is.
Cut back. Yeah.
There he is. All right. Well, we said good morning to everybody. It's good to have you back. How are things? Okay?
Oh yeah, things are okay. Am I giving information otherwise?
Oh no. You said
Yeah.
you had said you had something you wanted to talk about.
Oh yeah, I wanted to talk about the fake billionaire Chicago commodities trader that was arrested yesterday for taking like $2 million from clients. Apparently, this guy claimed to have 122 Ferraris and like 3 Picassos. I was going to ask do you know this guy?
I don't know. What's his name?
Okay, somebody help me with the pronunciation here. Philip Gallus or Gaius, Galles. He's 57.
Doesn't ring a bell.
Well, that's good. Not a friend of yours.
Yeah, it doesn't ring a bell. Yeah.
So basically, if somebody ever says that they have multiple Picassos and are going to increase your money by 300%, don't wire it to them.
Yeah.
Google them first.
Yeah, for sure. Yeah. 3 Picassos, that would be something. And how many Ferraris?
122.
122 Ferraris. Well, he's got me beat.
Yeah, you have like what, 10?
Yeah. And only 2 Picassos.
Yeah, of course.
I'm feeling very, very weak now.
I'll hang one of them behind me.
All right. Well, why don't we jump into the charts? What do you Hello, hello, hello. Hello, hello, hello. Hello. Check, check.
Okay.
We good?
Sound back?
Let us know if the sound is back. I'll start over.
The
Good
audio companies,
now.
when we switch to charts. Oh, good now. Good.
Okay. All right. So, all right. Has anything changed? No. Has anything changed in the last 5 days? No. The market is very range bound. Volume was a little bit lower yesterday. It was about 3.7 billion in New York. I think that there is change coming, and that's the one thing that we can count on in trading is things are going to eventually change. Now, the open interest is where the question came in this morning. On the preliminary bulletin, it says that we added less than 100 in open interest yesterday, which left me kind of hopeful for some sort of directional follow through possibly today. So moving to the 30-minute chart, and there's a reason why I was looking for a larger increase in open interest than actually happened. So we have the market opening, leaving the opening range at the high of the session, driving to the low of value from the previous day. When we open in range and value, better trade locations usually do come sometime after the open. And it was against the value low from the previous day where a good exit was possible and an entry was certainly possible. The market then began to grind higher throughout the day on negative delta. What's delta? Delta is the number of contracts that trade on the offer, which is positive delta, minus the number of contracts that trade on the bid, which is negative delta. So the market moved against the more aggressive traders up when the more aggressive traders were more likely to use market orders to hit bids. That makes them the more aggressive traders. You would think that would make them able to move price lower, but when it doesn't, that's a divergence. And I was looking for a potential longer time frame presence yesterday, and we're not seeing it in that open interest increase of less than 100 contracts. So it leaves me a little bit a little cognitive dissonance maybe. So by the end of the day, we had negative 4,600 open interest. Now that fluctuated throughout the day. There were actually periods when it was positive, but at the end of the day, when we opened, we broke, and then we ground higher. That was telling me there's somebody here that is a stronger presence than the short time frame P shooters like me. It's not being supported by that change in open interest. So just to look at where we are this morning, we've got some overnight inventory that's a little bit to the long side. We're going to be opening with a gap. Remember, I'm sitting here kind of thinking that, well, I was wrong in looking at a larger increase in open interest yesterday. What does that mean? Well, I'm going to be trading what I see this morning. If we can't open the gap, if we can't close the gap, as always, relatively early in the session, and again, that's a subjective term, relatively early. It's nothing I can do about that. But I'll be looking for opportunities, possibly to look for continuations to the long side. We are looking for some sort of change to occur. We didn't get good information from the market yesterday. The market is really range bound, and we'll be looking for a short up here near the upper extreme of the balance, or a long down here near the lower extreme of the balance. Cognitive dissonance puts me back in my seat a little bit. I'll probably keep my hand off the mouse this morning until something actually really looks good and comes to me and says, hey, here's a good opportunity. It's cheap. And if it does go your way, it's worth a lot. So we'll wait and see when that happens. Take a look at the TPO chart from yesterday. Normal variation, neutral, inside the previous day's range, outside the previous day's range here, still in range, still in value. Not a lot of good information in this. We have an excess low. The IB was the low of the session. We have an excess high. They're about equal. This market is basically saying, I'm comfortable right here. And until that changes, I'm going to be really cautious and maybe wait until after the first hour, the initial balance establishes itself to look for opportunities near the extreme. When you look at the low of the initial balance here, the market gave us once this was established, it gave us two nice opportunities with relatively cheap risk to see if the IB low would remain the IB low, and then there was a decent opportunity to the upside. So today I'm probably going to be looking at somewhat the same kind of strategy, is to maybe wait until the market opens up, establishes a range, and then work the extremes of that range. I don't know what I'm going to do here just yet. Just the fact that we did not see an increase in open interest yesterday on the negative delta has me a little bit like, hey, what was that?
Mhm. Yeah, I mean, there's probably nothing doing too much. Like I can't imagine what on a Friday right now is going to move the ES more than 1%, right?
No,
It was just in such a tight range.
it isn't. I mean, I think it's going to take some sort of event or news to knock this market out of this range.
Oh, absolutely. And
Mhm.
that's probably not coming today, so might be a good afternoon to take off.
Yeah, go play golf, go do a little day drinking, something, who knows?
Yeah, good productive activity like day drinking.
Yes, right. Right. So there's some beers that need emptying somewhere.
Yeah,
All right.
probably, if that's your thing.
All right. Now to look at the crude oil. Downside structure remains as open interest begins to waffle. Overall, I think open interest has been pretty good. We lost 300 in open interest yesterday. Probably some traders that got trapped on an attempted breakout of this trend line when it was up against these contact points. We've moved it now. We've got 3 points of contact again. So we took a little bit off of open interest. I'm giving the downside auction grade a C. A C. It's not doing that well. Volume is holding up. It's coming into rollover. My goodness. It's coming into rollover. Take a look at the 30. I mean, we've got downside structure overall. We have excess below $69 here, $68. Here's the 30-minute chart. Yesterday, gap close, range. Still trying to continue the move to the downside. Now, Joe was talking about what didn't happen. Well, what hasn't happened yet is we haven't closed the gap to this island bottom here. We gapped down, spent 2 days in this range, and gapped away from it. I've marked the gap with this blue block right here, this blue box. We have not taken that out. That is a friendly to the upside look.
Yeah, and I like the point that you made, Hogue. It was either you or Dan yesterday talking about the Strategic Petroleum Reserve. So there
Mhm.
is, getting towards that level on the downside where they would start filling it again. Could be resistance there, both from them buying and people just knowing there's kind of this,
Well, yeah, they kind of tipped their hand a couple of months ago.
yeah, it's probably not the way you should trade in general, is just tell people where you're going to buy the bunch of some stuff, but
Right.
so be it.
Yeah, it's not like they're, you know, retail pea shooters.
No, they are not. Just Joe Biden flipping one lots of
Yeah, there you
CL.
go. Yeah. Don't bother me. I'm trading. So that failed breakout here on the daily chart has me kind of looking to the downside. As long as we hold that level back to the 30, no real overnight inventory. We're in range. We're in value. What do I always say? It's time to be patient, as better trade locations will probably come sometime well after the open. At some point during the trading day, the best opportunity will appear. So be patient. To close this gap, we got to get down to 69.84. Just to put that on your charts. Just take a look at that. Take a look at the TPO chart now. A normal variation day, neutral, point of control relatively close to the center of the range. We have excess low, more excess on the low than we do on the high. We've got a low excess high. Market has not even tested to that level yet. We've got visuals above, we got visuals below. I'm going to be very patient today and wait until after the establishment of the initial balance, because we've opened in value. What does that say about the price of crude oil when it opens in the previous day's area of balance? It says that the collective perception of value has not changed overnight. So be patient, let the market find its extremes, and then work those extremes to your advantage, right? I mean, most days there is one extreme of the initial balance that remains as one extreme of the day. We got yesterday, yes, the day before, yes, the day before that, no, yes. And that's why I kind of point out when the initial balance is one extreme of the regular trading hour session, because it happens a lot. So we'll wait and see what this market offers as the day goes on. Not looking at a particularly busy day so far in either of the markets we've looked at this morning so far. NASDAQ, however, might be a little bit of a different story. We've got a kind of a balance breakout situation going on here. Now, we added 2,000 in open interest yesterday, and that's not a big number, but at least it indicates that people are watching, people care, money is coming in to the long side. Volume was relatively weak. That doesn't freak me out on upside moves in the equities. So the attempt to accept and move price higher, we're giving kind of a C+. I don't think that the open interest was that great. Volume is okay, not great. So we're giving it at least better than average look for the continuation of the upside. What about the 30-minute chart? Well, we've tested to a previous week, to previous naked point of control up here in the overnight session. That's not likely to hold. What do we say, Anissa? We say when a recent high occurs or an all-time high occurs in the overnight session, it's not likely to remain the high for very long. The regular trading hour traders get an attitude and they want to go check out that level too. Do we have any overnight inventory? No. Do we have a gap? Probably not. Patience.
Yeah, it seems that most of the the other sort of the earning bombs that go off in the NASDAQ are much bigger than in the S&P 500, if just because I think the top 4 or 5 companies in the NASDAQ account for like 40% of the index or something.
Right.
So I know that someone will have to check for me here. I know that Google's out, Apple's out.
All the biggies are out.
All the biggies are out now.
Yep.
Yeah. I think did well overall. I know Google made some AI comments that got them that AI bounce everyone's talking about. So with that out of the way, it'll be interesting. It's on a hell of a trend since the beginning of the year, the NASDAQ.
Yeah. As far as earnings are concerned, we're like in the final furlong approaching the wire.
That's what I thought. I just didn't want to miss one of them.
Yeah. So, all right. So again, I mean, it's looking like we gotta stay patient. We don't have any short time frame inventory to lean on. Here's the TPO chart. We did not have the same delta divergence in the NASDAQ as we did in the S&Ps. And in the NASDAQ, the IB extreme low, which I think stayed in the S&P. Yeah, we had an extreme low IB in the regular trading hours. It did take a look below. We've got a normal variation, a little bit of more than a neutral, but not quite an extreme day. Point of control did move higher. It was a good close. And we have excess on the low, lower excess on the high. So the nuances are saying that there is a good probability of continuation to the upside in the NASDAQ until it doesn't.
Yeah. I mean, as mentioned, it's just on a tear. I mean, you can draw a line with, 4 or 5 bottoms essentially from end of last year to right now, and it is pretty vertical.
Mm-hmm.
Yeah. So I guess you got to keep playing that until,
And
until it doesn't.
that's right. And yet it's still 20% off the high, where the S&P is like 15 or 10% off the high. Where is it
It
here?
was like 16,000 something.
So yeah, we're at 15, maybe 13% off the all-time high, where the NASDAQ is 20% off the all-time high. So it's got more room to grow.
Of course.
Yes.
To the moon or whatever is said.
When you're buying shoes for a 13-year-old, you buy them 2 sizes too big.
Exactly. Good point.
So here's gold. So this attempt at breaking out was a failure last week. We're still back in this relatively sticky area of balance. I'm getting so tired of saying balance. I want these markets to move so we can make
Exactly.
some bigger profits here. But we got to take what we can get. The markets giveth and the markets taketh away. We want to give a thing more than it taketh is. Downside auction yesterday was weak. The open interest change was inert. We added 700 in open interest. So it seems as though some of the, some shorts came in, but not a very tepid pace here. And again, we're right in the middle of the range. So we're just waiting for something to happen, something to change. If this were like equities and I saw this, I would think, well, if nothing bad happens, eventually we're just going to continue the grind to the upside. But we got to keep your eye on the dollar. The dollar has been strong yesterday, strong today. It's back above 102. We're going to see a breakout to the downside in the euro in just a second. So the downside auction kind of weak yesterday. Overall range bound. So here we opened with a gap. We have now closed the gap and driven back into range, back into value. This downside auction yesterday, I thought by its structure, and you'll see this on the TPO chart, was emotional and very weak structure. And think that there was a big move behind it, obviously, because we only added 700 in open interest. So take a look at the TPO chart. It's a B shape, long liquidation, only adding 700 in open interest. So the break yesterday, I thought, looked very hollow. Well, it's hollow because we're in range and we're not really driving in any type of direction, but just these overlaps, and then what gold does. It goes and then it sits. Goes and then it sits. So B shape would indicate long liquidation, which is not supported by the open interest increase, which is only a little bit. It was an emotional move. I would be looking for, upon acceptance inside of value, for the value area special situation play to play out relatively with relatively high probability today, because we did open with a gap. We've closed the gap. Now we're looking at acceptance inside value. So the value area special situation play is in play. We don't get good trade location where we are right now. Be patient. If you miss it, you miss it. But the downside auction yesterday was weak. Maybe we're going to come up and repair some of the weak structure that we put in on this move to the downside yesterday. This market has not been presenting as very confident. There's lots of teeth, lots of anomalies that just keep getting left and keep getting revisited. Very strange market.
For what it's worth, I talked about yesterday that we can look at some of the aggregate positions for Top Step. Right now, we have a 66% long bias in the NQ and a 53% 3% long bias in the ES. That means of the people trading ES, 53% of them are long. Of the people with an active position in the NQ, 66% of them are long.
It makes sense. It looks stronger.
Yeah, well, I'm always happy to see something up and then people being long it. That's good.
Yeah. Rake it in.
Yeah, please. Let's do it.
Yes.
Let's get this going on Friday.
Absolutely. So the euro, we had a breakout to the downside, and a lot of that was, of course, keeping your eye on the dollar. The dollar caught a bid yesterday. So we've really now broken not just the upside structure. Now we've broken the upside digestion structure. Anything can happen here. Dun, dun, dun.
Yeah.
So we got the state break yesterday. It was not on high volume, but not bad volume. We added 1,400 in open interest. Not a big number. However, looking back, we've had a pretty good steady rise in open interest overall. Day before we lost 900, but looking back, I think we've kind of been building some open interest in this area of balance. That open interest is going to bring energy to this move. Monitor for acceptance down here. We're looking for acceptance in time, volume, momentum, and participation. Of course, you have to keep your eye on the dollar. If the dollar continues to leak to the upside, you're going to see more and more selling coming into the euro here. Here's the 30-minute chart. Now, the breakout to the downside occurred yesterday. And looking at this market prior to the open, it was really showing some resistance at the weekly kickoff low here. The market opened. What number was PPI came out, and we popped right up to last week's low, and then we finally found our legs to the downside, falling into balance, accepting lower price through time. Market looks up back to that level in the overnight, and now we've opened with a gap. We have not closed the gap, which tells us we're looking for opportunities to sell strength unless something changes. We've opened with a gap. The only thing that's going to change from looking at this as a potential short is reacceptance in value from yesterday. That's the value area special situation play. The value area special situation play states opening outside of the previous day's range, going back into and accepting the previous day's area of value increases the probability of price reaching the other extreme of the previous day's value at some point during the current session. The value area special situation play is not on. We have to find acceptance inside of value from yesterday. What's acceptance? Again, subjective. When I first learned of this opportunity, if you will, I was told I needed 2 30-minute bars to close back inside the previous area of balance. But it doesn't get that easy. Nothing does. The market can come in, leave, come in, close, leave. And then just about the time you're ready to give up on it, that's when it plays out. Either that, or if you're trying to be cute to get in cheap, it gets into value and zooms to the other side and leaves you behind. It is a hard trade to catch. So my suggestion is, if it's something you're interested in learning about, watch when it happens. Don't necessarily trade it. Get some sort of accountability as to what your expectation is looking at this kind of standard opportunity. Part of it is I think a lot of people know about it, which makes it a little bit more difficult, but it doesn't change the fact that it increases the probability of a move to the other extreme.
Yeah, we got 78% of our traders who are in the 6E are long right now. But take that with a pinch of salt, because the traders at top step overwhelmingly trade what 2 products, Hogue?
The NASDAQ and the S&P.
That is correct. About 35 times more of that going on than the 6E right now.
Yeah. So the more data we have, the more data points, the more reliable it is, right, Jack?
Absolutely. So I think the NQ and ES is kind of valuable as far as what the bias is.
Mm-hmm. Take a look at the TPO here now. So excess gap close to the tick here at the 7:30 start. The 7:20 start actually overlaps more of the range from yesterday. Excess, no excess. Weak low. Normal variation, somewhat extreme day. The half back is right here. Point of control here. Volume point of control is all the way down here, calling this a normal variation extreme day. Market has opened, leaving a gap. That gives us the opportunity for the value area special situation play. But as long as we can't close that gap, I'm looking for opportunities to sell strength. Leaving the initial balance at the high of the day could be an opportunity for us to limit risk.
Yeah. I see some people asking how I found that data. I had that data because I work for Top Step, as does Hogue. So I can't see any individual positions here. I can just see what the aggregate is in each product that our traders are trading. And I need to ask to make sure that I believe that I can break that down between the combine and the funded accounts as well. In fact, I know I can. I just don't want to misspeak on what I have in front of me. But there is some information, some interesting stuff there. Also, I saw someone ask which of the products are most valuable or are most profitable for the traders. I think we would need a cleaner definition of profitability, because I will say this, as Hogue can attest, uh, the overwhelming, like, NASDAQ makes up a huge part of it. Like, the NQ is by far the most common product that people trade. Um, right now we have about 1.5 times on the NQ as we do on the ES. So I assume, I can see the risk.
Yes.
Yeah. I'll dive more on these. If people find the information interesting for the trading combine, happy to share more of it. And if you have any questions, feel free to ask me to, and I'll try and get them the most that I can.
Thank you, Jack. All right. So here's the 10-year volume and open interest higher again. We've had a pretty good jump in open interest over the last couple of days. As a matter of fact, 60,000. So about 130,000 additional open interest between this session and this session in a range bound market. Are they planning on something? Are they getting back into positions after CPI? Who knows? We just know that there is a pretty good number of new positions being created in the 10-year in a non-directional way here. So still in medium time frame balance. Weekly kickoff high proved to be too expensive for us yesterday. Take a look at the 30-minute chart here. So there's our look up to weekly kickoff high. A little bit of excess on the daily chart. Market has come off. When you see the market here, we had some pretty positive delta here, and it just kind of remained there all day as price continued to move lower. With the open interest increase yesterday, I would say we added shorts, and it makes sense up near this weekly kickoff high. What these levels are meant to do is to give us the opportunity to perhaps see longer time frame traders adjusting inventory, because price has gotten to those levels. It would seem that yesterday longer time frame increased their opportunities for shorts in a market that actually closed higher, but the grind throughout the day was to the downside. So take a look at the TPO chart here.
While Hogue's pulling that up for Dan, the oil position right now is pretty neutral. Just a few long on net.
Thank you. So where did we open? We got a gap between the day before yesterday and yesterday. Yesterday, normal variation, extreme day. No excess on either side. That's interesting. But where we open puts us into potential repair. We talk about repair a lot when there's a double distribution trend day. Well, if I were to combine these 2 days, basically it's a double distribution trend 2 days, and opening between the points of control lends to a probability of reaching both of those points of control. That's repair. There was very little time spent here. As a matter of fact, none in the regular trading hours. So there's not a lot of volume here. The market hasn't had the opportunity to see if if it can facilitate trade there. Opening between them gives us the possibility of a repair day, point of control to point of control. They're close enough. It could be a 1 day event where the market just kind of hangs here and fixes this hole, and I don't see anything that's going to really be an impetus to move the market away from this area. So that's why my focus would be on these points of control, at least early in the session, and then focus on the initial balance extremes later on in the session. The IB high yesterday was the high of the regular trading hour range. Day before, the IB low was the low of the regular trading hour range. It happens a lot. Take a quick look now at the NatGas. Here's the daily. So the market has found a very comfortable level here. We got some dojis here. The market is not very confident here. We've got a low, we've got a high for the week. We're in the middle of it. We added 3,600 in open interest. However, yesterday, volume wasn't all that great. Here's the 30. We got a little ahead of ourselves on the upside here. And then we look to the downside. What direction created the open interest yesterday of 3,600? Was it longs or was it shorts? Can't tell. Settlement very close to the previous day, 219. Overnight inventory? No. We're inside range. Value? Yes. Stay patient. Here's the 30 TPO chart. Excess high, naked point of control, naked point of control, excess low, range bound, range bound. Stay very patient in this market. This market is vicious, and you don't know when something goofy is going to happen to change it, and we're right in the middle of that range. I wouldn't touch this with Jack's money.
Oh, thank you.
So that's our look at the charts this morning. And happy Friday, everyone. Jack, Holden, happy Friday.
Yeah. Happy Friday to you too, Hogue. As you kind of spent a lot of words talking today, mostly looks like a pretty slow day. So don't force anything. If you have the chance to maybe kick off early to day or not day drink, do whatever suits you. But either way, have a wonderful weekend. Stay safe. And Hogue, I'll let you take it away.
All right. Well, thanks, Jack. Thanks, Holden. Thanks to all of you for joining us today. We are looking forward to your success. That's why we do this, and we hope that the things that we do make a difference. And so have a great weekend. Make sure you tell your mom Happy Mother's Day if you're lucky enough to still have her. Happy Mother's Day to you if you are a mom. And we'll take our deep breath. Stay humble, grateful, creative, and centered in your trading. You get off center, you're not going to make anything beautiful. Get back to center and then re-engage. Have a great weekend. Be kind to yourself. Be kind to others. Really be kind to yourself. We work hard at this. Deserve to do something nice. So have a great weekend, and we will see you Monday morning, 7:45, same bet time, same bet channel. A great session and a great weekend.